Welcome back to the Rate of Change with York Wealth Management. As advisors to some of the wealthiest families in the country, the Rate of Change is a podcast designed to help you in the pursuit of building long-term wealth through the insights of some of the brightest minds in asset management. I'm your host, Murdoch, and in today's ROCast, we're speaking with Macoun, the Managing Director of Pinnacle Investment Management Group. Pinnacle is a growing multi-boutique which provides their affiliates non-investment funds management services, enabling the investment managers to focus on what they do best. Currently, they oversee $90 billion worth of FUM across 15 affiliate firms in various asset classes, which provides investors options across most market cycles. Along with holding equity interests in their affiliates, they provide seed funding, global institutional and retail distribution, and industrial grade middle office and infrastructure services. For me, I really enjoyed hearing Ian break down how Pinnacle came to be and why they've chosen to work with specific fund managers. He unpacks what services they offer to fund managers, how the business operates, and where new technological advancements such as artificial intelligence are being used to improve the managed fund services industry. Before we get into the podcast, I would also like to encourage you to listen to the disclaimer at the end of this podcast and to keep your feedback coming. You can reach me at mgatti@ywm.com.au. So with that being said, I hope you enjoyed this conversation as much as I did, so sit back, relax, and enjoy. Ian Macoun, welcome to the Rate of Change with York Wealth Management.
Thanks, Murdoch. Thanks for having me.
It's really good to have you on, Ian. I've been using your funds for a while, and we've had many, guests on from some of the fund managers, which are underneath your stable. So
Yep.
I think this is going to be a very interesting conversation for us. I'm going to find it very interesting, and for our listeners as well.
Yep.
So why don't we kick things off? And I always like to start with learning a bit about yourself. So how did you get into the world of finance? And do you mind giving us a little bit of an insight into your formative years?
Yeah, absolutely. So I knew from quite an early age, really, that money and finance and all things financial could make a big difference to people's lives. And I was really interested in commerce and financial matters. And so I just knew I wanted to go to university and do commerce. I think you're lucky if you just have this inherent strong feeling as to what things interest you. And so I was lucky enough to have that. So I grew up in Rockhampton, actually, in central Queensland. I took a bonded scholarship to do commerce at university. That led to internships and a really good job at Queensland Treasury. So most people are surprised that I started in the public sector, but that was actually fantastic training ground. I loved it from the day I started. Because I loved it, I worked hard, got rapid promotion, and long story short, I ended up as the first CEO of Queensland Investment Corp as a brand new corporation. I just turned 33, and that's how I got into investment management.
Yeah, right.
Yeah.
I always find some people have straight paths, and other people proceed to you would never understand the path how they got there, but then
Yeah.
when you look back at it's essentially without that journey they would not be where they are, and they wouldn't be able to have the insights and the ability to run such an operation.
Absolutely. And look, the older I get, the more I want to help young people, especially young people coming into our industry. We have women in finance scholarships, etc. And what I say to them is, get in touch with your feelings as to the sort of thing broadly you're interested in, and then get started. And then the journey will go as it goes, and you'll have choices to make along the way. But as long as you're reasonably self-aware, it'll take you in a good path, probably very different from what you initially imagined. I had no idea I'd end up in funds management. It was really because of the superannuation, the growth that we could see ahead in that and the impact it could have on people's lives that got me so excited about investment management rather than, running a treasury.
Yeah, look, it's so true. Like even my background, what I went Joey's was I really enjoyed the architecture, so I wanted to become an architect. But
Yeah,
then marrying architecture with the maths and the engineering level behind it, ended
yeah,
up at Sydney University. Didn't do architecture, but all my mates were architects. And what
yeah,
I learned was if you're not the top 10% in architecture, you may as well have your cab license. And
right.
some of these kids at Sydney University, some of my friends were just so talented. And
Yes,
then but the other thing which I realized, going through that and chatting to friends, is there's different ways which you can get into building beautiful things. And one of them which I thoroughly enjoyed was, the finance side of things, right?
yeah,
And we'll get into it as well. But like, one fund which we've had on before, which is Palisade. They're just doing such a great work for the Australian community in the mid-tier infrastructure space. But at the end of the day, everyone just wants to be a part of beautiful things being built,
yeah,
which I
absolutely.
find quite
Yeah,
interesting.
it's fantastic. And, that tech background, I see computing and so on, that will stand you in very good stead in the future because, and maybe we'll get into that, the use of technology will be very important in delivering, you know, excellent investment outcomes to people who have a great need. Yeah. Anyway,
It's so funny you say that. I did a Bachelor of Design in Computing. I thought it was complete out of the waste of time because I just wanted to row at Sydney University and have fun and go to state and do the Trans Tasman and all that type of jazz.
yeah,
But then fast forward 10 years, it was probably one of the best foundations for the modern world we're in.
yeah. That,
Yeah, and then Master of Commerce, a bit of fun. But yeah, look, tell me about Pinnacle and how that came to be.
yeah. So I and my colleagues, who I guess you'd say were the founders of Pinnacle, we cut our teeth, got our early experience at institutional funds managers. Most fund managers were owned by banks or life companies and so on. And we were ultimately disillusioned at the ability of those kind of structures to provide the right environment for investment excellence, for the most talented investment professionals to get on with that extremely difficult but incredibly important job of delivering investment excellence, investment outperformance, and also importantly in sustaining investment outperformance. Everyone was looking to take shortcuts. We were poaching each other's people, which our clients hated, by the way. It's the last thing clients wanted. They wanted stability. And, the talented investment professionals were distracted in so many ways. And the industry just wasn't set up to deliver what we were promising our clients. So we felt that there has to be a better way, a better environment for these talented, scarce, amazing people to go about, this incredibly important task. So we came up with this, what we call the multi-boutique model, which we felt was the best of both worlds. We felt that the boutique environment was very likely to enable the most talented and experienced people to deliver the best outcomes. But a standalone boutique could be fragile, and the investment people could be distracted by the other functions. So to be an excellent investment management business, you have to be good at distribution. You have to have all the infrastructure to a truly excellent standard. And yet these people have to focus on investing. So how can you do all of that? So our solution was the best of both worlds, the boutique environment for these investment professionals, but with the functions where scale could be a benefit. Those were shared functions. And we took the responsibility for delivering those functions to the investment professionals to a very high standard and saying, if you don't want to, don't worry about these things. You just get on and investing. That's the scarce and precious piece. We'll do the other bits. So that's really, well, for me, it was Perennial first. That was the first multi boutique. Then in the end, things changed there. I went looking for another backer because I was such a believer. I was just a passionate believer in this multi boutique model, and it didn't really exist. So we had to build it. We had to build it from scratch. So I, for example, boring, public servant, ended up an entrepreneur out of necessity because the model that I believed in didn't exist. We had to build it. And that was 17 years ago. It's been a long journey, and there were a lot of skeptics in the early days, but not too many skeptics anymore, Murdoch. People generally are believers that it's a great model.
The brave go into the fray. Um,
Yep, yep,
the brave go into the fray indeed. Look, I've always respected entrepreneurs, and the people that can see that something there's a need and it doesn't exist, and there's a whole lot of people that are going to hate you for it.
yep,
But the thing is, at the end of the day, if your product's sound and there's a need, and you're actually giving people what they want in a better format, it just benefits everyone. And just to give for our listeners that aren't really familiar with what a boutique fund manager is, maybe we could discuss it in the concept of horses, right? It's a very nice way of putting it. So,
yes,
everyone loves horses, but only some people can afford to, own multiple horses, house them, warehouse them, feed them. But some people just want to ride horses or race horses, right? So, would it be the correct analogy saying that you essentially own a horse stable,
yep.
which enables people to own horses and keep them in your stables and make sure that everyone's looked and fed, and then when they want to ride them, they can ride them.
Absolutely. I'd go even further and say that the people who look after those horses can just focus on the horses and the looking after them. They don't have to worry about the broader aspects of the business and making sure that everything else is organized and so on. But yeah, it's a good analogy. It's all about focus and people doing the things that they're good at and not having to do everything.
Yeah, teams make more money than an
Yeah,
individual.
absolutely. And it's also a stronger and more resilient business model. If you only own one horse, you know, you'd have to be very lucky for it to be successful. Whereas if you do own a stable of them, you're going to have some winners.
The other thing which I wouldn't mind discussing and your thoughts on this is we saw when there was a big move into managed funds, 20 years ago, for Australians, which is everyone normally just had a ComSec account and Australian property. But the world of, high end wealth management, people were looking for incredibly brilliant minds to run wealth in particular asset classes. We did see a trend of a number of great firms coming out that started with one particular strategy and all of a sudden they had 10. But one thing I always thought was quite challenging for those firms was, what happens if your main speciality is just say growth assets, or your main speciality is property, or it's just fixed income. We hope this isn't the case, but as we've noticed, that nearly every single investment out there does have a particular cycle to it. If
Yes.
it's short term or if it's long term. So, why? So, with the funds you currently have, how many funds are there, and why have you chosen the particular strategies in the portfolio? Is that to
Yep.
diversify against that cyclical risk, or
Yes.
how does
Yeah,
it work?
absolutely. So we wanted to have a strong and resilient business that no one ever has to worry, could you be in trouble during a particular stage of the cycle? So we have 15 affiliates. We believe they are all amongst the best of their kind, and they all specialize in particular areas. And as you say, they're all different and it's quite diverse. We have Australian equities, global REITs, more recently, more private market asset classes. Metrics is is, you know, private credit. Coolabah is listed credit. 5V is private equity, etc. So it covers a big range. So, our proposition is simply we don't have to do everything, but everything we do, we have to be excellent at. And we will deliver to our customer base a range of investment capabilities which are in need, which people are looking for, to a very high standard, with the talented investors focused on delivering just that, just their specialisation.
So let's discuss some of the actually let's do this. Like say right now, is there a particular asset class that's not currently in the stable that you're looking to find a partner for? Like what's the
Yeah. So there are quite a lot of them, Murdoch. Um, it's amazing. People say to me, "Oh, you've got 15. Surely you're done." And no, the needs of investors are increasingly diverse, and there's a lot more out there that we could do. But we don't say we want to have one of these and one of these and one of these. The most important consideration for us is with a particular investment team that we discover, whether they approach us or we go looking for them, are they the real deal? Are these people the best in the business with a proposition that investors need? And if that's the case, then we'll back them and we'll deliver that to the market. Unfortunately, we're listed and it's normally confidential when we're talking to people. They may well be working for a big institutional funds manager at the moment,
I
or
didn't ask the name. I
yeah,
just said, hey, what
yeah,
interests you in an asset class?
what type? Yeah, no, but we're talking to quite a lot of people at any point in time, and to be honest, many of them don't end up having us back them. In fact, we do a huge amount of work with people. We need to get to know them extremely well. I used to say that of the people we look at closely, we probably only do 1 out of 10, and now it's probably 1 out of 20. So the bar is very high. The standard is very high because we're about investment excellence. And if we are not completely convinced about the proposition and the team, we'll say no. We don't have to do everything. We've got a great stable already. We think our existing strategies can go from 90 billion to probably 400 billion in time. They don't exceed their capacity, but they've got a lot of capacity left. So the new things we do have to be great, really great. But
Well, if you'd indulge me, if you're allowed to discuss it, I'd
yeah,
love to take a look under the hood about how the business actually works and operates. So,
yeah,
how's the mechanics of it actually work and operate?
yeah. So our business model is pretty straightforward. The investment professionals are the majority owners of their own business. They're an affiliate and they can go about their job, focus on investing, and we provide all the other services, institutional grade, distribution, infrastructure. They can choose to use all or any of our services, but they don't have to. There's no compulsion. That's just there to support them. We make our money through the minority equity we own in those boutiques. So it's highly aligned. Most of our investment professionals are investors in their own funds, and we often invest in those funds as well. So there's just a tremendous amount of alignment. They make the decisions on when they're out of capacity or whether they add any extra strategies, and we're there to support them. And they generally do use our services so that they can stay focused on investing. But it's a pretty simple model, minority equity, but we like it to be real equity. We have arrangements with them for the recycling of equity as younger investment professionals emerge. And when founders or older people look to retire, we expect that equity to be recycled because we're building businesses for the very long term. We
Do you
expect
mind
our,
just giving a bit more clarity on what you mean by recycled?
yeah. So there are arrangements whereby when the time comes, and we don't push for this to happen any sooner than it needs to, but when people are looking to step back or step down, they have to sell their equity um, to either emerging executives, often with loans from Pinnacle, or sometimes Pinnacle will buy that equity and over time sell it to emerging executives. But we
Is that
like,
contractual, or is it more, as you said, with loans? It's in the capital stack that there's an agreement that you're first in the queue if someone's looking to retire, and a key manager is looking to exit. You're first in the queue to
yeah,
have the rights but not the obligation to purchase that equity in the business. How does that work?
yeah. So it's all about ensuring succession and longevity of the businesses. It is contractual that they have to sell because we don't want people sitting on equity beyond them making a contribution anymore. One of the observations we make is that investment management firms around the world do succession poorly.
Right.
And it's sad, people hang on for whatever reasons, ego or whatever. And we could name some big fund managers who've had to, dynamite out founders and who lose key emerging people because they don't do succession. But yeah, that's part of our secret sauce, Murdoch. It's part of the deal that we do when we partner with investment professionals. We contemplate succession, even though that might be 20 or 30 years away, because it's too late once you're getting closer to it to try to put arrangements in place.
Yeah, it's very similar with conversations that we're having with wealthy families. Where the issues come is when someone makes a decision or health or something equivalent, or
Yep.
they want out tomorrow, and no
Yep.
one's had a conversation. No one knows what's going on. There's no communication, and then it's a dumpster fire of an
It's
event, and emotions get involved, and it's very difficult to handle.
it's too late. And what a tragedy.
Yeah, it's
Someone has
such a
spent a
tragedy.
lifetime, someone's spent a lifetime building something and it's a mess.
Yeah.
That doesn't have to be that way and it shouldn't be that way, but you've got to be thoughtful from quite a long time earlier, way before it's imminent. And it's not perfect, but you can set things up to give the maximum prospect of good succession.
Well, let's discuss that key person risk in some of these managed funds. Some of the fund managers I've met over time, they are the business. We could.
Yep.
There's a very high profile one that was the number one player in global, and is on its way back, but it's gone the way of Manchester United. How
Yeah,
do you deal with having such a prolific figure leading the charge, and
yeah,
then an event occurs, and you do have that transition, but it's not exactly the shop that it was
yeah.
before. How do you help that firm
So we
get back
call
to
them,
the old times?
yeah, we call them rock star fund managers. We don't do rock stars. So this is, I mentioned before that when we set up Pinnacle so long ago, it was to overcome the weaknesses we saw in the industry. One of the weaknesses was firms built on rock stars. And this happens all around the world. And we think that's a problem. We want teams, not individual rock stars. Now, of course, we do have key people. Every fund management businesses has key people. You need leadership, but there's a big difference. It's a little bit subtle. It's a fine line between good leaders, investment management leaders who are always talking and thinking team, and rock stars who talk and think I. I mentioned we spend a lot of time with people before we decide whether to partner with them or not. And you can tell when people are talking more about I than we, and you know that they're really on about, they think they are everything, and they may have people around them, but that's their servants rather than their colleagues. And we don't like that. We think that makes for a fragile business. Sure, it can blossom for a period of time, and sort of slightly sadly, they attract people, they attract investors to them. People love to see a hero. I want to believe in this guy. But the rock star thing has a terrible downside to it. So we spend a lot of time, as I said, working on succession and teams building and growing. And that's the reason we want to build long-term, enduring, sustainable businesses. Yeah.
Yeah,
And
it's quite interesting. Can't help myself, but I keep seeing on the buses everywhere the new Napoleon movie coming out, and
yeah.
yeah,
Well,
there's been a number of phenomenal people in history, but the rise of falls and empires. But that's what I find quite fascinating about fund managers and the conversations which I'm having with clients and friends and family members is this fund manager, oh, they're a great person, they're making money, but then something changes. And what I've also noticed is with a lot of Australians that is so used to a standard Australian equity portfolio moving into managed funds, because
yeah.
they've had superannuations at a number of these large institutions, they think that I stick my money in and then these people are going to be able to manage that regardless and always get me the result. They don't understand that a fund's business, they're just people, right?
Yeah.
You're playing the person, not necessarily, and the team. It's not like you're purchasing an index fund or where there's an algorithm going into it.
No,
So it's quite
it's
interesting how you manage it because by the sound
yeah.
of it, you're essentially running an administration business for managed funds, and your currency is
Well,
people. Is that
yeah,
correct?
people is everything. People is the absolute core. And I would say don't be in the funds management business if you don't understand that these talented investors, investment professionals, they have certain personality traits. They can be difficult to work with and so on. And it's a complex, it's a whole environment. It's not just one person out there being a genius, because the downside to that is just crash and disaster. Now, we say that is not necessary. It is not inevitable that you'll get crashing. Um, but you have to plan for it well in advance. You have to be able to work with these people. And, it's a day by day proposition. As issues start to emerge with people, you need to address them so they don't become big problems. Whereas, with a rock star, people just convince themselves it'll be okay, but it won't.
Yeah,
Yeah.
the only constant in life is change. So, very true. So, with just getting back to the mechanics a bit, how much, with all the funds, the 15 underneath Pinnacle now, how much money are they overseeing?
A bit over 90 billion.
$90 billion.
Yeah. It's grown tremendously. Um, yeah. We've been listed now for 7 years, and I think we're probably about 20 billion when we listed, and we've grown very, very strongly. I think our CAGR, it's well over 20% per annum. So, which just goes to show if you get something right, and it's not easy, and you have to execute continually, but if you get it right, people love it, and you will grow rapidly. But you need to plan for rapid growth as well. And our model is quite modular, so it can grow rapidly without problems.
Do you can the fund managers work anywhere in Australia? Work from home? It's
So,
a or are they required to?
yeah.
Is there
So
any requirements of the funds or?
the overwhelming issue is what delivers for clients. That's what matters. So, no, certainly we have some affiliates as they become more and more global. You've got people in different parts of the world and so on. But, the majority of our affiliates now have their people in the office most of the time because of those subtle benefits of sort of collaboration and spark, sparking off each other's and sharing ideas and so on. That's the way it's turned out. Not because anyone's mandated it, but because, and each affiliate makes its own rules, you know, but that has tended to be the case. Investing is hard. You need everything going for you. And so most of our affiliates have ended up figuring that even though, they like flexibility and talented people need a degree of flexibility, they also need to work together quite a lot.
Teams make more money.
Yeah.
Very, very true. The other question I had is it predominantly Australian domiciled funds, or do you have any international, or are you considering any international domiciled
Yeah.
funds?
So at the moment, just because of our history, 13 of our 15 affiliates are sort of headquartered in Australia. A number of those have people located overseas in the US, Canada, London, and Europe, etc. But 13 of them are headquartered here. Our two most recent builds, or what we call Horizon 2, where we build things from scratch, are overseas. One is Aikya, which is based in London, um, although a couple of the key people are out here at the moment. Ashish presented at Hearts and Minds on Friday. But they're based in London, and Greg Dean and the Langdon team are based in Toronto, Canada. They do global small caps, and they're based there. Yeah, we think we're becoming increasingly global. It's a global industry, and we're finding a demand for what we do overseas as well as in Australia. We've been doing distribution overseas for a while. About 11 billion of our 90 comes from overseas investors, and that's growing rapidly. So we think we will end up with quite a few more affiliates based overseas in
Is
global asset classes. Yep.
so if I'm understanding you correctly, the Australian domiciled business is going quite organically, and
Yes.
you're having a number of conversations with a lot of people. So as you said, you're choosing one out of 20. So that's quite stable. Are you saying that your from a growth focus internationally
It's it's
is on the mind? Is that what you're saying?
Yeah, and we don't rule out excellent things that are Australian based, and we tend to know the people here. But yeah, I think there'll be more done overseas than in Australia now, and Australian investors need global asset classes, a range of asset classes, and we'll deliver those.
If the
Yep.
international business grows, and you probably can't talk about this because you're listed, would
Yeah.
an international listing be potentially on the cards?
Look,
A dual listing at all, or
yeah, look, I don't really think so, Murdoch. We love the Australian. Um, the ASX is a great base for us. We have, a lot of Australian fund managers, institutional shareholders, but we have some foreign ones as well. But they don't seem to be calling for us to be listed over there. They seem to be able, they're global equities managers. They seem to be able to invest in a company listed on the ASX. I just think we need to stay focused and true to what's made us great, and we don't want to get over our skis.
yeah, yeah. We how many times have we seen that before when you done so well in your little patch, and then companies try to
Yeah,
overextend in particular areas. Like look at
yeah,
Starbucks, right?
yeah,
Or going into the fray and then realize, hold on a second, people in particular countries do not like coffee.
yeah, absolutely. And we've said, as we do things overseas, we're going to be incredibly careful because we're acutely aware of those mistakes. Yeah, you've got to keep the
um,
right culture.
so we talked about okay, what's a day in your life?
So for me, I'm a servant leader. the most important aspects of my job are making sure that we are doing an excellent job of supporting our affiliates. So I'm on the board of many of our affiliates, plus we're their distribution partner, we're their ops partner. Um, I say to people, I spend most of my time on worrying about the things that could go wrong and any issues that are emerging, because I've always had this philosophy: if you address things early, as soon as they are emerging, then nothing becomes a really big problem. So, a day in my life, often affiliate board meetings, but I also catch up informally with a lot of people in our affiliates, and then our people in distribution and all of our ops, etc. I'm sort of there, at their disposal if they need me, if there's anything complicated or important that they need me. I also have to stay open to our shareholders. I mentioned institutional shareholders. We've got to keep them informed. Um, Twice a year, we have results, annual results, half year results. We spend a week out on the road talking to shareholders. So that's one aspect. But we keep it a flat structure. We keep it tight. We keep the personal relationships strong. We need to know what's going on in our people's lives. Um, so
How
yeah,
many people in Pinnacle now?
there are about 120 in Pinnacle itself, and broadly about half of those are in distribution, marketing, etc. Um, Australian wholesale and retail distribution, institutional offshore, and about half are operations. Responsible entity, middle office, finance, risk, insurance, all that stuff. All the stuff that just has to be done very well so the investment professionals don't have to worry about it.
Do you see any changes? I did a podcast yesterday, and he's asked him what was the main risks he's currently facing. He said the main risk is essentially regulation risk. With the government, is there any
Yeah.
big risks coming down the pike with regulation? Like, I'm a financial advisor. We just went through the phase year. I think there was 16,000 advisors, and then we're down to 8,000 now. If you
Massive.
didn't pass the test, and there's
Yeah.
there's fantastic investors, 60-year-olds, 50-year-olds that are essentially being forced out purely because they did what probably all of us should have done, and not spent 5 years and how many hundreds of thousands of dollars in education, and they just
Yeah.
went straight into the game, and they're probably some of the best advisors that I've ever seen or ever
Yeah.
had the privilege of working with. But
Yeah.
there's continuous changes.
A-
What do you see happening?
a- Absolutely. And, we're sort of a market led organization. We pride ourselves on being very close to our clients and customers and understanding how their needs are changing, how our industry is changing. But yes, we are in a very heavily regulated industry. And I would say rightly so. We are entrusted with other people's money. That's a huge fiduciary responsibility. Um, it's important to understand where the regulators are coming from and stay ahead of all of that. We put a lot of emphasis on it to make sure we're not ever going to be in trouble. We're ever going to be doing anything that might cause us to run foul of the regulator. We put a lot of emphasis on, just ethics and having high standards and always thinking about our investors, the people whose money it is. Our mission or purpose of our company is enabling better lives through investment excellence. So we're always thinking about our customers. So there have been changes for fund managers in regulation. Your Super, Your Future was one that made some changes. But it's more the investment environment is changing. I mentioned it's globalizing, etc. So another thing is technology is going to change things a lot. People are talking about AI, but I think we generally only have a very vague idea of what it means. To me, it will be enormous. And I want to make sure that we understand the potential of all of these new tools, the new data, the computing power, what can be done to gain insight to make better investment decisions. That's going to be quite big. All of our affiliates are working on it in one way or another, but it's quite uncertain. As you say, uncertainty prevails. But these are also opportunities. If you keep if you focus on excellence, if you're focused on doing everything you can to be the best investors you can be, then you don't miss these things. You know, you're there.
Let's keep going on the tech and the AI and just the evolution that is the access to information. I was listening to Joe Rogan and Elon Musk discuss, AI the other day, and he
Yeah,
says that he's actually quite cautious about the damage which it can do. But then
yeah,
I use it myself in a number of aspects, and it takes tasks that might take 4 hours down to like 30 minutes. You can phrase an
yeah,
article as a particular question, and then you
yes,
get talking points, and it just completely um, has expanded. And like me personally, I run my own business, York Wealth Management. Used to be with Shaw and Partners, but if you look 20
yes,
years ago, I've got a number of friends that came through JB Weir, Morgan Stanley, a number of these fine institutions, but they held the keys to, if you're an advisor, you had to work at a large institution if you wanted
yeah,
any research. Fast forward 20 years, and, I'm very privileged to now be able to do what I do because I have now access to so many fantastic third parties that have just evolved efficiently, providing access to efficient, accurate, on time information that just makes my life able to live the life which I do. Like, how are you finding the evolution of technology and AI in the business?
yeah, absolutely. So, I mean, technology is the secret to improving productivity and to overall advancement of standards, ultimately to improved lives and living standards. Of course, all technology can be dangerous or damaging if it's used the wrong way, and we do need to be careful about that. But the big risk is missing the opportunity and not being on the front foot and taking advantage. I mean, I think even of the internet. People ask me about AI, and I say, well, think about the internet. When it started, it was some vague, only techos had any idea about it, really. And this idea about the cloud and email and all this stuff, it was just mind boggling. But then we started to see the practical applications, and it's been a revolution. And how much improvement has occurred. AI will be the same, but you'll need to understand it. You'll need to have the resourcing. It means adding some expense and studying the emerging capabilities that are available to you. Sort of two categories. One is massive improvements in efficiency, as you've talked about, which we are onto, and that will be tremendous. But in investing, um, better investing insights. I mean, I've always said investing is pretty simple, really. It's researching and uncovering the information that you need. Then it's analyzing it and gaining insight out of it. Pretty simple, really. And, over the decades, I mean, back in the day, people spent the vast majority of their time trying to find the information. Now, finding it, you still have to be smart enough to know what data you're looking for and so on. But the tools are there, the computing power is enormous. So, if you're not onto it, onto figuring out how you can use this emerging AI type technology, which will be completely different and keep evolving enormously, you just won't be a good investor in time. So
Yeah,
I think it's
I
exciting.
find this quite interesting. This particular topic, not just for funds management, but just human beings. I've got two kids, a 4-year-old and turning 6. Right, so
Yeah,
we're looking, at the school system and going, okay, well, it was once created by good old Rockefeller and Ford to essentially put everyone into industry. And then 1957, they said, hold on a second, we want to stick people on NASA and and then my mum got free education in university because they wanted doctorates and etc. But
yeah,
I think there's been a change in New South Wales recently, an update to how they're educating kids.
yeah,
But I still find it's behind. And what I mean by this is, I still find that yes, you need to teach the reading, the writing, the arithmetic, but then arithmetic, sorry. But as you said accurately, is it's not before it was, hey, let's fill everyone's brain up with information, and then you may have a task where you can use it. But what you're really talking about is comprehension skills. Like,
yeah,
there is so much information readily available at a drop of a hat. I think South Park just came out with an episode. I won't touch the Disney subject, but they were discussing how AI that normally, yeah, people that are unlicensed immigrants over in America, they'll go to Home Depot to get a job as, but they're the wealthy ones. Some of my friends are making more money than God, as plumbers and everything, because no one
yeah,
knows how to do anything anymore, right? And
yeah,
they're holding signs going, "I've got a $250,000, you know, debt, with a particular university for a geology degree,
yeah,
right?"
yeah,
Which it is ridiculous now because anyone can just search with AI. How does geology work, right? So
yeah.
what's your?
So
I suppose where I'm going with this is, there's a lot of young people probably listening to this podcast as well that want to get into funds management, or your business, or be a fund manager or in the investment game. What's your counsel to them with how do you deal with AI and then building their skill sets to essentially embark on the journey that you've had?
yeah, so look, things will change massively and radically. So I agree with you. You can't fill your brain with all the things you need because as soon as you do, it's redundant. Um, but as I said at the beginning, because some things never change, the essentials, and as long as you stay focused on the essential aspects of what need are you seeking to meet, because people's need for investing will never go away. It's a matter of how you can achieve it and get it to them. So what I'd say to young people is, well, absolutely, you need to study some tech. You need to be tech aware. And the specifics of it to some degree don't really matter. I would also say you need to make a start in finance somehow. You have to show your interest and your aptitude. And by the way, do a good job of it because employers are looking for talented people, and we need to see some evidence to say, yes, I want this person and not that person. So you need to get in and just start to demonstrate your interest and your ability, but it's not about the specifics. Once and get started, get started in your career because so much of the learning that you find mentors and you develop so much once you start. And you may change exactly what you're doing. You probably change many times. If it's your kids at 4 and 6, they will change many times. But the basic idea of thinking about who your customer or client is, what their needs are, and my job is to find ways to meet that need, that'll never change. It's just the specifics of how you deliver it that change. And
The
and
how
also
always
people.
changes.
Yeah, and also people, as we've discussed, put time into your relationships. And I think the younger generation do that better than I did, my generation did. You need to work with people. It'll always be teamwork. I don't care what the computers and the tools are. You still need to collaborate and work with other people.
Yeah, I couldn't agree with that more. There's Elon Musk was discussing how he pulled his kids out of school and then he built his own school. I call it synthesis or something equivalent. And the
Right.
entire thing was they got rid of ages for schools, and it was about on aptitude. And the entire thing was from the starting the age of 7, they were playing games like high-end comprehension games, essentially like Fortnite on steroids. And
Yeah.
they had like 4 or 5 kids, and then there was no instructions, there was no nothing. It's just, keep having a go at this. And what they found really quite interesting is some leaders came out, the doers came out. If something's, kids have the ability to essentially explore, find themselves, and then do teamwork. Right.
Yeah.
And the more I read about this, the more I think, my kids or friends' kids, right? That particular skill set, when we're, working in my business, your business, or a fund manager or something equivalent, it's all teams, right? The ability, everything changes every single day. Everything's fluid. And then how do we, as you said, what I asked you, what do you do in your day? And you said, oh, predominantly creating solutions to problems that arise, right?
With
Every
people.
single day, problem solving, right?
Yep. Working with people to do that. Yep.
And it's essentially people, people, people. It's people and problem solving. It's
Yeah.
just so interesting. Um,
Absolutely. So
is
our
there is
education system's going to have to change a lot too, but they'll have some good tools. We just hope we've got good people uh, doing the redesign.
yeah, that's a whole topic for another conversation. Don't want to put anyone offside, but look, a lot of great
Yeah.
teachers out there that have done a great
Yeah.
job. They're working again. It's a system, right? We're
Yeah.
discussing regulatory changes. What are the changes in the system, and how do you go about that to essentially improve one's life, which is
Yeah.
everyone's thinking, correct?
Yeah. Using the technology that's becoming available.
Yeah. Um, The other question I had is there's some shareholders probably listening in, and there's some people, that may want to go down the journey of building, a stable of fund managers. What are the numbers? What type of profit margins? What are the numbers of the business?
Yeah. So the way we have always operated, the way we've built Pinnacle, we don't say, oh, we want to get to a certain level of profit, even a certain level of funds. We've essentially said, look, we're on a mission here. We believe, with every fiber of our body, that there is a better way of doing funds management. And we think we know what the key ingredients are, the talented professionals in a certain environment supported properly. So if we just go out and we find the best people in a range of fields, we do a good job of taking that to clients, well, it'll be a success, you know? And I'd have to say it's been successful beyond anything we imagined. But it's a platform now and it will grow a lot from here. I wish I was 20 years younger because, you ain't seen nothing yet. But it's about doing an excellent job and doing it for the customers and meeting the needs they have. If you keep doing that, the numbers will work out. So, as it's turned out, we've all made more money than we ever imagined, not because that's what we set out to do. We set out to do something that we thought was important and do it better. And so it turns out lots of people want to invest with our affiliates. That's, young people sometimes say to me, as I say, I talk to a lot of them, I try to help. They say, hey, we want to be like you. And you say, well, what do you mean by that? And if it turns out they're saying, I want to make a lot of money for myself, I say, you'll almost certainly fail, young man or young woman, because if you do that, you'll take shortcuts. You will not do the right thing by your customers. But if you are on a passionate journey to deliver a need that is a major need, and you're just devoted to doing that, you find people who are also devoted to it, get on with it, you'll make quite a lot of money. Our market cap's about $1.5 billion. It was 3 billion. Our share price has halved in the last 2 years as we've gone through that difficult stage of the cycle. We're not fussed about that at all. We're focused on the medium term. We always have been. So, look, the numbers work out well. It's quite profitable. We always price our things very fairly. We want to be good value for our investors, but it also has to be a a successful commercial proposition for your shareholders. We talk about 4 groups of stakeholders: our clients or customers, number one, our shareholders, our people. We have to have an environment where top quality people love working, and then the community, the broader community, where we're doing lots of things. You mentioned some of our managers. You've seen what amazing things they're doing for, climate and the environment and society generally. Of course, our fundamental purpose is helpful to people's lives, enabling better lives. So that that's the main game, and the financial numbers fall out and end up being pretty good if you're good at it. And if you're not, you'll fail.
I think that's quite good advice. Build something that people want to play with, and then if they want to play with it, they play with it, and then essentially, don't focus on the money. That's actually been the whole core of what Phase is about. Don't focus on conflict remuneration. If you build and
Yeah.
genuinely look after your family or the people you're looking after, and you want to build a service and you want to do it to the highest standard, then
Yeah.
essentially the rewards follow.
Yes.
Don't put the cart before the horse.
Correct.
So what keeps you up at night and what gets you out of bed in the morning?
So look, to be honest, I sleep pretty well, Murdoch. Um, I mean, look, part of that's deliberate because I am interested in health, and I know that sleeping well is very important to that and to functioning at a high level. I mentioned before that I work hard to address issues as they emerge, and I work with my colleagues to do that. And if you do that, which is not easy because people's natural tendency is to dodge hard things, but if you do it, nothing becomes a big problem. The sort of things that really will keep you awake at night, all night. So I feel, very good about the quality of the people around me and our business model and our capabilities and so on. So the things that you might think might keep me up awake at night really don't. And that's not that I'm complacent, but that we address things. I mentioned before the changing nature of investing and technology, whether we'll be able to adopt the right new technologies and data and so on. I hate the thought of missing opportunities and not being as good as we can possibly be. That's one thing I do worry about. In the end, it'll be younger people than me who have the responsibility of delivering that. But what I worry about most of all is the people who are missing out. There are so many people miss out, for example, on the benefits of good investing. There are so many people out there who just don't know what to do about money and with their money. They don't know where to get help. So sadly, just sort of out of fear or just not knowing, um, money is not used in the way that it ought to be. And, you are not going to get the sort of outcomes you need with your money if money's left in bank accounts or cash or just the wrong kind of investments. And, I said to a good friend of mine recently who's very involved in financial literacy, I said to him, Paul, I'm afraid that I'm going to end up retiring not having been able to do anything about the fact that investors come pouring to the equity market after equities have gone up a long way, and they come out after it's gone down, and it's just a tragedy. And he said to me, well, Ian, it's in our DNA, fear and greed and so on. So we need to take some responsibility for helping people. But I do worry that we as an industry don't do a good enough job in helping people to get the right outcomes with their money.
Yeah, It's always an interesting one. How do you get people on the right path of education? Hopefully, someone someday may petition the government to allow finance to be taught in schools,
That,
accounting, legal, just shake things up. Or anyone out there that runs an institution or thinking about opening up an institution, preferably someone in Lane Cove, that offers primary or high school, and get the ability to educate young minds early on in the piece, to like,
yeah,
even if someone wants to get a Sparky or get a chippy trade, like the majority of my friends that do that, they run their own business anyway. And then they need to know, okay, what do I do with that money? And I think at that point you touched on before, the majority of the families which I speak to, they're phenomenal. They've done the same thing over and over again to a
yeah,
point of excellence for 30 years, running their own thing. And one of the most troubling conversations I have is they think that they can take what they've been doing for the past 30 years. They get a very large windfall when they sell their business or retire or something equivalent, a lot of money, tens of millions of dollars. And then they think they can do the exact same thing in the finance world. But
yeah,
the first year, if it's a good year and it's, say, COVID and everything moves up, they think they're heroes. They don't need any help. But then
yeah,
there's always a winter around the corner. And what they don't realize is the number of variables associated with our industry. And then they
yeah,
get confused, and then they don't know where to hide, and they go, screw this. They toss in the towel, and then throw the money in an asset class they think is safe.
yeah,
Um, but
yeah. No,
yeah, I just think, don't you agree that just a pathway for, education, or just the ability to find information,
yes,
is so important.
yeah. So financial literacy is just a fundamental life skill,
Yeah.
like learning English or basic maths and so on. So, and it's not that hard. So, yes, there should be attention given to that. And then, yes, help people to understand you don't have to do it yourself.
Mm.
If you're an expert in your trade or your field, you don't have to be an expert in investing. You just have to know how to find the right people to help you. It doesn't happen often enough.
Yeah, I completely agree. So with that being said, Ian, look, it's been a pleasure having you on. I've learned a lot from today, and I hope
Yeah.
everyone has felt the same.
Yeah, I've enjoyed it. I'm sorry if I've taken us off on a few tangents, but
Look, that's the reason. Look, in all honesty, Joe Rogan's been such a fantastic person for the podcast genre of these long format conversations. This is the most enjoyable part, when you go on tangents and then you end up in particular places, but it's all associated to financial markets. It's so interesting.
yeah, you're
And again,
talking
I
about
really thank
things.
you for your time, man.
No, you're welcome. You're talking about things that I'm passionate about, so that's yeah,
Isn't that the key to a happy life?
it is absolutely. Yeah,
All right, Ian, have a great day.
great. You too. Thanks a lot.
Bye.
Bye bye.
Any views expressed in this recording do not represent the view of any other third party and are the sole personal opinions of the speaker. Any reference to financial product does not constitute advice or recommendation, and before any action, you should seek proper advice from your financial professional. Australian listeners should head to www.moneysmart.gov.au to find more information on obtaining financial advice. To get in touch with York, head to our website www.yorkwealth.com.au.